Now, from NBC4, Laurel Erickson, this is News Conference.
Good morning, everyone. What does it all mean? We heard housing sales were down, then the Wall Street went down, then Friday we heard, well, it's not such a bad economic report. And then there's all those loans from China to fight the war. Helping us sort through all of this, we've got Associate Professor and Director of the Master of Real Estate Development Program at USC, Raphael Bostic. Welcome, sir.
Good morning.
And we've got the man you don't want your house on his website. We've got James Sacaccio from Orange County, CEO of Realty Track in Irvine. Welcome.
Thank you.
What can people in Southern California do? Is the market going down? Is it going up? What's happening?
I think the market is actually in a sort of limbo period where we're trying to sort things out. The basic underlying economics are fine. We have low unemployment. We have significant job creation. We don't have a high level of inflation. So all that's fine. But what we have overlaying this is a certain amount of tension, particularly around a jittery tension around the housing market. People have really become accustomed to drawing from the equity in housing to
prices going up or down,
everything.
Mr. Bostic?
Prices are going to go down, but just by a little bit.
Okay, a little bit. How much is your little bit?
Our little bit, I think, is from 5 to 10% in certain areas. I think you're going to see a decline.
Foreclosures jump 800%. Headline after headline after headline. My question is, people look at these numbers and they think, the sky is falling. But if you only have 2 foreclosures last year and you've got 4 this year, it's a big deal. But it's not really, is it?
Well, I think we've seen a big jump from last year to this year, and I think that's gotten people to panic a little bit. But we're really not that far above historic normal levels. We're up slightly, but nothing that I would say we should all run in panic.
Well, what about if you're living in Riverside and there's a whole block of houses that have got for sale signs? Compare, if you will, guys, Brentwood, Riverside, Carson, say Fountain Valley. Give me a handle on what's going on in different neighborhoods.
And when you look at the Riverside area, what you have to be careful about is the time on market. And when people enter into foreclosure, into default, there's typically a much shorter window, over 120 days, in which they have to cure the process. Now, when you're looking at an 8 to 10 month cycle to sell the real estate, it's very, very important to be proactive and not reactive. So if you find yourself in a situation like that, you need to reach out to your lenders, because I think today lenders are more willing to work with consumers. They do not want to foreclose on these homes.
In terms of where do we think there are going to be difficulties, I think where we see spikes in unemployment, so places where people are losing their jobs will have problems. And the second will be places where we've seen a lot of new supply added. So you talked about Riverside County. That's been one of the real centers of the foreclosure crisis, and in part that's because there's been a lot of new housing that's put up there, which has made the supply much higher, and that has weakened the ability of the existing homeowners to price themselves out of a foreclosure situation.
The way I would approach the numbers is really based on your time horizon. Your investment, are you investing it to live in? If you are, it's a long market cycle for you. If you're going to be there 30 years and you're going to retire in that house, it's not really, shouldn't panic on the ups and downs. If you're an investor and you're looking to turn the property quickly, you have to be aware of what you buy it at.
One of the beauties, the quote beauties of California is that, in Southern California, is that we don't have a lot of land. There aren't a lot of options, and if you like those amenities, what we're going to see over time is that with the population growing, the scarcity of homes in particularly attractive places is going to make it expensive.
How does somebody know if they're in real trouble? To get back to how long houses are in the market and your line for the foreclosure? Or what?
Well, when I look at it, foreclosure is a lagging indicator. A lot of things are going to happen before foreclosure happens. You're going to see the pressure on your job. You're going to see that your bills are up high. And then, recently we've seen the adjustments on the rates, which all created a problem for people, and they all converge at the same time.
The real question in terms of, how do you know you're in trouble, you should be doing the math. And if that monthly payment is starting to look like it's coming really close to your monthly income, you're in trouble. And, if you want to avoid foreclosure, the important thing is to recognize that early and then reach out to your lender and say, look, I think we're going to have a problem here 6 months down the road. Can we work something out now?
So the headlines say one thing, but it comes back to basics.
Absolutely comes back to basics. Do not use your real estate asset as an ATM.
It comes to optimism. So a lot of the subprime mortgages that people entered into, they entered into with the belief that the market was just going to appreciate in such a way that they would no longer have difficulties or problems. I think it was, it's a bet that didn't pay off.
Gentlemen, thank you very much. I appreciate both of you being here. Next up, the other big bet these days, internet politics. Listen to our group. They're going to tell you what they think the internet will do to the presidential election.